won't stop till I hear him say,
guys don't know retail methodology trading patterns, go read about them on Baby Pips and then do everything in your power to trade against them. At the end of the day, here at CYPRX, we teach our students how to trade against them, how to visualize liquidity in the market, how to identify pre-engineered liquidity in the market, and then how to utilize that as a catalyst to move in tandem with what the banking institutions are doing. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, in today's video breakdown, I'm going to display to you guys my full analysis and technical breakdown on how I was able to catch this short position on XRP US dollar, utilizing fundamentals, utilizing some of the things that I've displayed to you on YouTube and as well as Twitter, all in confluence with the higher time frame analysis and the fractal structure, breaking down every single bit of my entry criteria for you guys to make sure that you all stick around for this YouTube video breakdown. Smash that thumbs up button if video breakdowns like this help you all out, understand price action a little bit better. We do appreciate it here at CYPRX, and we are trying to grow a channel. Without further ado, let's jump into today's video breakdown. So before we jump into today's video breakdown, guys and gals, I am not a financial advisor, and I'm not telling you guys to go and trade leverage XRP. But if you guys do want to do so, you guys can utilize CYPRX. I am not an affiliate of them. I'm not going to sit here and try and collect affiliation money off you guys. You all are more than welcome to visit their website yourselves, but this is the platform and the broker that I personally utilize. You guys can go check out some of the other cryptocurrencies that they offer in the form of leverage for you all to trade. Again, they offer a demo account for individuals who aren't used to trading leverage. You all are more than welcome to go to their platform. You guys can scroll down to the bottom of this website. You guys can open up a demo account and test the live market with the CYPRX trading strategy. With that being said, you guys can also scroll up here. You can see the different cryptocurrencies that they offer in the form of leverage for you to trade. Here's down here, you see XRP. All right. So again, this is the platform and the broker that I utilize. A lot of people have been asking me. I do not have an affiliate link for them. I'm not going to sit here and attempt to collect money off you guys for signing up with my affiliate link or anything like that. Just visit the website yourselves. Okay. So before we get started in today's technical analysis breakdown, I have some fundamentals and some tweets to share with you guys. I said right here on August 26th, I said clockwork XRP, and I displayed a picture to you guys, right, of the XRP US dollar chart. And then over on the right-hand side, I displayed a picture of the US dollar currency index. Okay. Now, I've told you guys in the past that these are negatively correlated charts. That means if the United States dollar is going up 9 times out of 10, that means XRP is going down. So I utilized that as a catalyst and a confluence to take today's trade. Same thing here. I said the game isn't hard to play. So if you guys do not follow me on Twitter, I drop subtle little hints on how it is that we trade here at CYPRX. Hopefully you all are picking up on those hints. However, you can't beat a horse to drink water. Okay, all you can do is lead them to it. So here I said 90% of news displayed to the general public is already priced into the market. The market won't reverse with a major alt season with crypto price discovery until United States dollar weakens and regulation comes into place. But when it does, the demand for utility will be so high. So this is just to prove to everybody that I'm bullish on the markets overall. All it is that I'm depicting to do here is teach you guys how I intraday scalp the market. Now, I've told you guys in the past video breakdowns that if price is above 32 cents, I'm going to seek to take buy and sell positions in the form of intraday scalps on XRP. Right. With that being said, that leads me into today's video breakdown. And I want to go over the fundamental outlook first, which I don't necessarily want to say that this is what caused United States dollar strength overall, because I'm not a fundamental guy. But if you guys are interested in fundamentals, something positive came out for the United States economy today. U.S. services PMI at 56.9%, August 2022. Services ISM report on business. Economic growth activity in the service sector grew in August for the 27th month in a row, with the services PMI registering 56.9%, says the nation's purchasing and supply executives in the latest services ISM report on business. The report was issued today by Anthony Naives. In August, the services PMI registered 56.9%, 0.2 percentage point higher than July's reading of 56.7%. Okay. And I've told you guys that I utilize forexfactory/news.com to go ahead and check out that fundamental aspect of things. If you guys want, go and check them out yourselves. I'll link that in the description down below for anybody that trades crypto that wants to keep an eye on United States dollar strength and weakness. Okay. Over here, we see another report. The U.S. service sector expanded in August at its fastest pace in 4 months amid a pickup in business activity and new orders. While price pressures continue to ease, measures of business activity and new orders both advanced to their strongest readings of the year, reflecting both an ongoing shift in spending habits and steady wage gains. Demand strengthened abroad as well, with export orders expanding at its fastest pace in nearly a year. The upbeat report points to resilient and robust consumer demand for service despite high inflation, rising interest rates, and generally uncertainty about the economic outlook. Okay. So that was another article right there. I'll link that in the description if you guys want to read that as well. And then right here, this is from just investopedia.com for individuals that don't understand, fundamentals. Go and just read through investopedia.com. Read about the FOMC, read about GDP, read about PM services reports and things of that nature. Okay. That's how I did it. I've been studying this stuff now, collectively speaking, fundamentals for about 2.5 years. When I first became a profitable trader, fundamentals wasn't really something that I focused my attention on. Really getting that technical analysis approach solid and down to a T was something that I really focused on. And then when I became profitable, I started to orient my attention more so towards fundamentals once I grasped some sound technical analysis. But if you guys are interested in where I taught myself technical analysis, it was simply literally just reading fundamentals when they come out, seeing how they affected the market, back testing them over and over and over and over again over 7.5 years. So it takes time, guys and gals, to understand this stuff, but don't sleep on it because it could help you out in your trading. Again, I've told you guys in the past that price action and the fundamentals are usually priced into the market ahead of time. All right. But with that being said, you guys can still take these things into consideration. So the PMI is based on responses from the members of ISM Business Surveys Committee, which includes a range of industries diversified by the North American Industry Classification System. And based on each industry's contribution to the US GDP, gross domestic product, the survey covers 18 industries that include every aspect of the manufacturing sector, right? So scrolling down here, just something interesting to read, which is why the news came out bullish for the United States dollar and the United States economy. For diffusion index in general, a reading of 50% indicates no change from the preceding month. While the further away the index reading is from 50%, the greater the rate of change. A reading of 100 indicates that all survey respondents are reporting increased activity. So with that being said, a PMI reading over 50 or 50% indicates growth or expansion of the US manufacturing sector as compared to the previous month, while a reading under 50 suggests a contraction. So what did we see, guys and gals? We saw that the service sector PMI grew in August for the 27th month in a row, which temporarily boosted the United States dollar. Okay. You guys can see that the United States dollar strength on the hourly chart during New York session open came up to a new high at roughly around 110,500. With that being said, that allowed me to take a short scalp position on XRP US dollar, and I'm going to get into that here today. Okay. So again, I told you guys that I trade this divergence in the market where if the United States dollar is strong, then I look for sell positions in the XRP US dollar trading pair. And then vice versa. If the United States dollar weakens, I look for buy positions. And that's just a confluence that I utilize, a little gem that I like to drop to you guys on YouTube. With that being said, take it with a grain of salt. Make sure that you back test it. Demo account trade it. Don't just hop into the live market and think that because the United States dollar is dropping off the face of the earth, that's time to buy crypto. That's not how it works. Make sure that you guys go and back test the strategy first, or make sure that you're enrolled in the CYPRX mentorship program so that way you guys know how we approach the markets from a technical analysis standpoint as a whole, not just based off of United States dollar weakness and strength. Okay. So that is going to be the first confluence to the list of confluences that we had today that gave us the sound approach to take the short position on XRP US dollar. So I will go ahead and I will expand the charts. We're going to start on the 30-minute chart. Something that I want to take your attention to first is identifying key areas of premium where the banking institutions prior to this New York session sold from. Remember, I've told you guys the piggyback methodology, that banking institutions like to sell from a premium from areas in which they sold from prior or previous sessions. With that being said, I want to take your attention over here to August 28th, an area that I had highlighted mainly because you guys can see that this was a liquidity trap here. I will go ahead and explain that for you now. You guys can see this double top formation or this retail resistance pattern in the form of a market surge up into roughly around 33600, and the market declined. Same thing here. The market came back up into this area and the market declined. taking your attention over to the left-hand side, you guys can see that there was a high over here in the form of premium where the banking institutions during this New York session on August 28th sold from. So that caught my attention in the form of external liquidity that the market makers during this trading range over here could come to seek to attack in the form of retail resistance traders selling from these highs in the form of double top formations. If you guys don't know retail methodology trading patterns, go read about them on baby pips and then do everything in your power to trade against them. I apologize if you guys have ever fallen victim to somebody charging you thousands of dollars to trade these methodologies in the market. You know, it really sucks that people are out here trading these methods, but at the end of the day, here at CYPRX, we teach our students how to trade against them, how to visualize liquidity in the market, how to identify pre-engineered liquidity in the market, and then how to utilize that as a catalyst to move in tandem with what the banking institutions are doing. Okay. Now, with that being said, during this New York session, we see the market push all the way up into the area of retail money, liquidating anybody's stop losses from people who sold during this New York session, from people who were selling these highs, from people who were selling these highs, or any of these highs above these areas. The banking institutions came to target those stop losses. Now, immediately after the market makers targeted those stop losses, what did they start to do? They started to create the definition of bearish order flow. And I'm going to get into that in just 1 second. Before we take short positions or before we take buy positions or long positions, whatever it is that you want to call them, you guys need to have pre-engineered targets in the market, meaning what areas are you going to specifically seek to take profit from, especially if you are trading on a leveraged account. You never want to over leverage your account or trade leverage and not take profit and move your stops to break even, protecting your capital. With that being said, this area down here, I'd like to explain to you guys, was the area in which we had as our target areas here on XRP United States dollar, mainly because what do you guys see down here at these lows? If you guys have been watching this YouTube channel for quite some time, it's the same trap as above, so below. You guys saw this retail resistance trap up here in the form of these equal highs. Well, the same thing down here in the form of these equal lows are retail supportive traders. Retail traders that are trading some type of double bottom formation with over leveraged positions beneath these lows, thinking that the market is holding this in the form of some support, right? It's disgusting. Don't trade that way because as you guys can see time and time again, the market makers, what do? They target these areas of liquidity. Same thing here. They target these areas of liquidity. All right. If you guys are still paying attention and you're catching on to what it is that we're teaching here at CYPRX, smash that thumbs up button. We do appreciate the love and the support. Now to get into the nitty gritty of the confluences surrounding this trade breakdown. So as you guys can see on my charts, my entry was roughly around 33450. Again, a psychological level confluence that we pay attention to here at CYPRX. We trade XRP United States dollar. That means that we're trading in tandem with the quarter theory. That means we're paying attention to the 00s, 25s, 50s, the 75s, and the 00s. Now, with that being said, we have another psychological level confluence. I'd also like to mention that my stops are moved to break even on this trade, and I've taken partials from this trade, roughly about 80% off of the table, and the other remaining 20% is still running, hopefully to see if price can come pull back up, fill in this imbalance, and then make another leg down. We will be monitoring this price action into Asia session today. With that being said, let's jump into the fractal and higher time frame confluences. So I already explained to you guys here in this area how this wick spike or this bullish momentum came and grabbed the orders above these equal highs. Now, coming over here to the left-hand side from August 28th, that high that I mentioned in the form of premium where New York session sold from in the past, you guys know that we like the piggyback methodology here at CYPRX. So we take from the candlestick wicks down to the body. This is the area where this banking institution during this New York session, whichever major institution sold price action to cause this market movement, sold from in the past in the form of premium. So we highlighted this area, which also correlated with this area before on August 27th. So that was two solidification areas in the form of premium where the banking institutions from previous sessions sought to sell from. So we highlighted those areas and extended them over. Why? Because we know that if banking institutions fail to break above this level and print bearish order flow beneath it, they are more likely inclined to take sell positions. Another thing on the 30-minute chart that I'd like to take your attention to that gave us another sound confluence to take short positions on this XRP trade was that what? We are operating at a high. With that being said, we know that the banking institutions are not going to buy from a high. They are going to push price down into liquidity traps or areas where they bought from in the past and then they are going to take buys. Well, guys and gals, if you look at my charts, I know that there's a lot of arrows on here, but where are the most significant areas that banking institutions during New York session bought from in the past? Here at these lows, here are these lows, and here are these lows. Well, guys and gals, would you look at the price action? The market makers are not going to buy from a high. They're going to manipulate price down into lows from where they bought from previous days, and then they will consider taking buy positions if they choose to do so. Now, that was another extra added confluence to why we were able to take the short position today on XRP United States dollar. So as you guys can see, in the previous video, I mentioned to you guys that we do not pull the trigger on our trades until we have a sound list of confluences. So let's just take a second and think of every single thing that we have so far. As of right now, we have United States dollar strength. This is what we were seeing during the beginning of the New York session. I showed you guys how on the DXY at the beginning of New York session, the DXY started picking up strength. You guys can see in this candlestick right here, this is the New York session open at 5 a.m. Pacific Standard Time here in California, and the market on the DXY was bullish. That gives us one confluence to say that if the DXY is bullish, most likely XRP is going to be bearish. Again, because we are trading up against the United States dollar. Now, with that also being said, what other confluences do we have? We had a liquidity grab above highs and an immediate match of bearish momentum. So this bullish candlestick we can identify was a impulsive move to grab liquidity because immediately following, price came back down, so bearish momentum matched, and then we failed to create a higher high. What did we do after that? We created a lower high. You guys can see indicated by this little hump right here that we created a lower high in comparison to the previous high. So this we have to identify in the form of liquidity above highs was a liquidity grab or a impulsive move or a manipulation move to push price action up to grab over leveraged traders that were selling above these highs. So that was another confluence. A sound extra confluence was that what? We were pushing into an area of premium where the banking institutions sold from on August 27th and August 28th. That is now 3 sound technical analysis confluences along with fundamentals that we were utilizing to take this short position. Another confluence was that we had logical target areas in the form of retail supportive methodology traders taking over leveraged positions beneath these equal lows, drawing some type of imaginary retail supportive region beneath these lows. You guys can imagine that people that try to learn some type of support methodology in this market were trading with leverage when the market came down and created this double bottom formation. So that gave us a sound and logical take profit area. Again, something that I've mentioned you guys need to have if you're trading leverage in this market. Where are you going to take profit from? What are going to be the parameters that you set for yourself that allow you to move your stops to break even and pull profit from this market? Again, protecting your capital. Okay. So far you guys can see how we're building a list of confluences. Now, with that being said, coming into this New York session, we're going to drop down to the 10-minute chart and I'm going to show you guys how fractally we were able to scalp this market. We entered into the market again at 33450. As of right now, my stops are moved to break even, but this is where my stop loss was when I initially entered the trade. So coming into this market, I had already mentioned to you guys that we are operating at a high. As you guys can see, New York session got past price action at a high, roughly at around 33675. Again, another psychological level confluence in tandem with the quarter theory, the 00s, 25s, 50s, 75s, and 00s. Because we're trading up against the United States dollar. If you guys have never read the book, The Quarter Theory, I highly advise that you guys go and do so. It's a very intuitive book, a very big read, takes a long time, but it's got a lot of great information in it, okay? Now, with that being said, after this liquidity grab, again, what do we teach you guys? We can go ahead and flip the charts upside down, not to confuse anybody, but here is the CYPRX pattern that we teach you guys, which is a what? A pre-engineered low in the market, a sweep of that liquidity, and a bullish match of momentum. In this case, a liquidity trap above highs. Guys and gals, you cannot make this stuff up. It's the same thing as above, so below. After the sweep of liquidity, what happens? The market starts to create higher lows that lead to higher highs and fractal breaks of structure. Okay. With that being said, coming into this New York session, simply all we did was the market pulled back. The market rallied again, breaking previous market structure. So this is now a higher low after the market squeezed liquidity out of the market. And that led to another higher low, higher high formation. Flipping the charts back right side up, you guys can see how this correlates with sell pressure. So simply all we did after the market created higher lows after the sweep of liquidity was we took our Fibonacci from the new fractal A to B move. I want to flip my charts right side up for you guys and just to show you all how this correlates as above, so below. So remember, if we're looking for a bullish scenario, we're looking for a liquidity trap to the upside. Okay. We're looking for a pre-engineered low in the market. We're looking for the market to sweep that low and match bullish momentum. So after the sweep of liquidity, we're looking for that bullish match of momentum and for a higher low to be created that leads to a new market break in structure. Then we're looking for a reason for the market to push higher in the form of liquidity. After the market gives us a sign that it wants to hold this position and not push down beneath whatever psychological level it rejected here in this area over to the right-hand side, we can seek to enter into the market to have sound confluences to take the market higher. Guys and gals, as above, so below, it is the same thing to the up and downside, as you guys can see. Now, with that being said, like I mentioned, we took our Fibonacci from this high down to the low that broke this previous market structure. So we'll go ahead and click our Fibonacci tool, taking it from the high down to the low and extending that over. You guys can see that our entry point was roughly at around 70% retracement in the form of premium to add to our overall order. I've mentioned to you guys multiple times that the banking institutions can't just take one buy or sell position. They have to take multiple positions to add to their overall position. They can't just push the market one significant time. They will pull the market back and add to their order time and time again. As retail traders, it is our goal in the market to be able to identify where they are going to most likely push that price action back up into to sell off in the form of premium or push down into to buy in the form of discount. With that being said, guys and gals, let's just confirm and go over all of our sound confluences that we took to approach this market today. Overall, we have the DXY strength, which led us to believe that we were going to see a depreciation in XRP. We have bullish fundamentals coming out for the United States economy. We have higher time frame liquidity grabs. I showed you guys on the 30-minute time frame how these areas over here will equal highs. And I showed you guys how this market structure was a manipulation move that came to grab the liquidity in the form of over-leveraged traders above those highs. Then we also have these significant New York session areas where the banking institutions sought to sell from in the form of premium. As you guys can see, this is a New York session that sought that this was premium price to take sells from. And then that same thing occurred again on August 28th, where the banking institutions during this New York session sought that this was a proper premium for them to take sells from. We highlighted those areas on the 30-minute chart and extended that over to the right-hand side. We know here at CYPRX that if the banking institutions fail to break these psychological levels that they sold from in the past, they're most likely going to take sell positions again. Another sound confluence that we had was we identified that price action was passed at a high during this New York session. Based off of logic that I've taught you guys in the market before and in the past, we know that banking institutions are not going to buy from a high to continue price higher. They're going to manipulate price down into lows in the form of where they bought from previous days. I identified that to you guys as well. You guys can clearly see that this was a New York session buying opportunity, buying opportunity, buying opportunity, and buying opportunity, all specifically during New York sessions. So with that being said, we already know that the banking institutions, most likely, if they're going to buy, are going to manipulate price down into at least these lows before they sought to take buy positions. That was another added confluence. Another added confluence was what? We had retail money in the form of a double bottom formation underneath of these lows as logical target areas. Again, you guys can now see that we are simply just building our confluences to have the confidence for a trade to potentially go in our favor. Nothing that we trade here at CYPRX is guaranteed, but with our sound list of confluences that we provide in extreme detail to the CYPRX students, we are able to give ourselves an edge in the market. After we identified that this was a manipulation move and this was a reverse and shift in momentum, we saw that the market started to create lower highs that led to lower lows fractally. That is bearish order flow, or the failure to create higher high price action, or bullish order flow, which is what? Higher highs and higher lows. We were able to identify that coming into this New York session. And after that price action came into fruition, we see another rejection of this red highlighted area, a rejection of the 33675 psychological level that leads to a market break in structure. As you guys can see, this bearish impulsive move broke this previous market structure. As above, so below, guys and gals, these would be the higher lows in a bullish scenario that are created after a liquidity grab. Well, in a sell scenario, these are the lower highs that are created after a liquidity grab. Simply all we did was we took our Fibonacci from this A to B move here that broke previous market structure, and we waited for a retracement. You guys can see that our entry criteria was roughly at 70 to 66%. We entered in at the 33450 psychological level in tandem with the quarter theory, and we sought to target what? we sought to target the equal lows down here in the form of retail supportive methodologies. I told you guys I took 80% from the trade when those lows were violated. That allowed me to move my stops to break even to protect my capital. And now this trade floats with 20% remaining on the table in profit. Guys and gals, I hope that you guys enjoyed this video breakdown from the top down, all the way completely understanding some of the confluences that we provide to the CYPRX students. If anybody's interested in that mentorship program, again, you guys are more than welcome to reach out. Guys and gals, if you're one of those individuals that has or holds XRP, or you're looking to intraday trade it, whatever the case may be, the CYPRX confluences and the CYPRX strategy can help you guys out, situate yourself on the right side of the market. Nothing that we constitute here is financial advice. Simply all I do is teach the students how it is that I give myself an edge in the market, and that is constantly working for them as well. With that being said, guys and gals, reach out. The customer support email is down in the description below. You guys can always visit cyprx.teachable.com. I've had a lot of people reach out and schedule Zoom calls lately. I do appreciate the love and the support. We reached 8,000 YouTube subscribers. If you're not subscribed to the YouTube channel, guys and gals, I told you all time and time again, we are going to continuously grow here at CYPRX. Blessings to you guys all. As always, be cognizant, be aware. I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say